Hello. Today is Saturday, May 6th, 2023. I'm Jason Shapiro with Crowded Market Report. I wanted to get into a little bit this week about this stock market crash that we all know is coming, but for some reason hasn't come yet. And, this reminds me very much. I interviewed in the middle of 2006 at a hedge fund that I ultimately joined and worked at for 5 years. And during my interviews in the middle of 2006, I met all these portfolio managers, and these people were mostly macro portfolio managers. And to a man, they all would speak to me during these interviews about the housing bubble and how it was going to be very bad and how ultimately everything was going to crash because of it. And as it turned out, they were totally right. But in the middle of 2006, you were obviously way early. And first of all, I'll tell you that not a single one of those people made money when the thing actually crashed. And the reason for that is that, and they were probably, the fundamentals of this whole housing thing were obvious starting probably 2004, 2005. So you're talking about 3, 4 years before it actually happened. And you don't have the ability to hold on to that trade for that long. First of all, you'd be losing money the whole time. Your investors would be fed up and they will cut you, right? And second of all, you need to get paid in the meantime. So at a certain point, you're like, forget this. I just need to go with it and get paid. Now, there were a few people, as we know from, the movie and the book, The Big Short, that did make a lot of money on that. But they were somewhat lucky in that whoever's money they were managing allowed them, they didn't short it in mid 2007. They were short for a long time. And finally, it came and it worked. But they lost money for quite a bit before that. And they had investors that were able to sit through that and good for them. But most don't have that, right? So the point is ultimately it happened, but it took a long time. And in my view, what it takes is for people to give up on the idea. And once they give up on the idea and they get out of these short trades, then there's room for it to happen. So let's go back to 2007, right? And here, first we'll do the S&P chart. So the S&P ultimately topped in the first week of October, okay, in 2007, right? And if we look at the positioning data, be the commitments of traders, this is all of 2007, okay? So you see that speculators, large speculators, who I like to fade personally, were short because they were bearish, like I was saying the whole way. And we're getting shorter, shorter, shorter as the market was going up. And then all it took was 1 week, okay, which was this week right here. If we take the commercials, which is the opposite of the speculators, right, from this week where they were super long, right, which was like the third week of September until the first week of October, that's where they got out. And it was mostly because the small speculators, who are the worst of all the traders, ended up getting long stock, right? So like my system, for example, would have been long go away and it would have gotten out here. Now it didn't get short, but it would have gotten out here, which would have been like the last week of September. So what it took was speculators to give up on these shorts, whether they're forced in because the market's making new highs and their P&L can't take the pain anymore, or whether the fundamentals changed for whatever reason in their view. They got out of those shorts. And as soon as they did, within 2 weeks, that's when the market topped and started to go down right here. Okay. And we can go through the other indices as well, which aren't as pronounced as this, but here's the Dow, which also topped, in October, about the second week of October, right? And if we go and look at the Dow for 2007, Commitment Traders Report, okay, we see that it was the same thing. This is 925. It's not as pronounced as the S&P was, but still speculators were short. And in this 1 week, last week of September, they got out of their short. And commercials actually got net short. Again, not enough to get me short, but enough I wouldn't have been long, right? Which is good enough for me. And that's when the market started to go down. I'm not making this up. This is just the data. And let's do the Nasdaq. Same thing. Nasdaq topped a little bit later, but you're still looking at sort of later in October, maybe a week or two later when it topped. And going back to the positioning thing, we go to Nasdaq. Okay, the top was here. So in this case, speculators were never really short the Nasdaq, but they did start to build their longs into this, and that's when it topped. Again, this would not have given me a short. It's possible that it would have given me a short here, which was the middle of October, but for the most part, flat, but not long, right? So that's what's going on with the whole commitments of traders and when the market is maybe going to crash or whatever. So now we can take a look at today's commitment of traders report is here. So Dow, we still see speculators pretty short. S&P, we still see speculators very short. Okay, which is why I've been long this stuff. And Nasdaq, we actually see for the first time speculators are getting long. Now they're not max long. As we saw in '07, they don't have to be max long for the market to start going down. They're neutral. So I wouldn't be long Nasdaq here, which doesn't mean the Nasdaq can't continue up, but I am long S&P. I am watching this commitment of traders very closely and looking for when there's a capitulation. Is it going to be the same exact thing that happened in '07? Probably not, but maybe. But certainly it's going to take some form of capitulation by these shorts, in particular in the S&P. And once that capitulation happens, even to neutral, then you can start thinking about, hey, what the fundamentals are saying in this stock market are going to come true now, right? When that will be, how long that will take, I have no way of forecasting. But the good news is every week we get this data and we get to watch it and we'll keep an eye out. All right. So just something I thought I'd share because I thought it was interesting. Things don't always end up being the same as they were last time, but just an interesting concept to take a look at. All right. I hope you enjoy that. I'm happy to hear any questions or comments. And we invite you and hope to see you at crowdedmarketreport.com. Thank you.